Good day, fellow investors. Last year we did this video how Interactive Brokers is a good broker and it was an even better stock to buy. Now there was this comment from Janice from Greece likely that the stock is now down 11%, and what are my thoughts now after a year? As this is a company that I follow, I'm always happy to discuss. Plus, just a notification here, I have, because I think this, after my research on brokers and everything, is the best broker out there, global coverage. I have a link here that if you click and check the broker, I get a fee on. So if you want to support the channel, you can always click on this link. Go to the Interactive Broker page, see whether and how global market access, good yields, good interest on your cash position, low margin rates for those that are interested in margin, 90 market centers. Also, my research platform members always share the good experience they have whenever there are these global issues, delistings, transferring. It works pretty well with Interactive Brokers. So that is something you can check in the link in the description below. Therefore, if I get the fee for you clicking, if you join or not doesn't matter, just for you clicking, I think I will put this as a sponsored video, even if it's just my opinion sharing, because we also analyze the business and we'll also analyze the risks for the stock. If we look at the company overview, so everything is growing, 30% of accounts growth. This is also the factor that shows that it is a good business because a lot of people are joining and taking advantage of this global coverage at a very, very low cost that other brokers simply cannot match. Therefore, revenues are growing, everything is growing, profits are growing, and everything looks good. They are automating things. They have the possibility to scale this. So as the number of client accounts is growing and the client equity as the market goes, you see here mostly is individual, but they are now introducing other brokers, hedge funds, things like that. So they are going for financial advisors, and that's also how they try to grow there. It is very strong in Asia Pacific as the leading broker likely there. So that is also something. As the markets there grow, economies grow, keep in mind there is 5 billion people there compared to the 1 billion. That's also a long-term trajectory for the business. Pricing advantages, the fees are really low. And then you get a good interest rates on your US dollars, margin rates if you're interested, trading rates, everything is lower. And that's why it's not me saying this. They have all these accolades from various brokers and nothing wrong with the broker. I think they are pretty stable. They have 74% of ownership is from management, and they have this structure where just 25% is available trading, so free float, and the rest is in another company holding the other interest. So don't get confused there. Anyway, good profits, earnings per share of 2 for the last quarter, bringing it to 7 for the year. Everything has been growing. Commission revenue increased 37%, net income increased 11%, number of customers increased, and everything. So everything looks great. But if we look at the stock price is down 31%. Of course, 31%, but it's just back where it was a few months ago. So there was this boom, AI trading and increased trading, great markets, everything. And now as the fear kicked in, the stock is already down. It is still significantly up from when I made my video before. So we have to check how is this going and what happened here. What is the fear there? And the fear comes from interest rates, because most of their money is made by interest income from the cash you are holding there. They put it in 4 or 5% treasuries, and they pay out just 3.8%, and then that is a big spread here, plus the interest income on the margins and on the going short. So the total interest income, you can see here, is 50% higher than the total non-interest trading income. So they make their money on your money on their accounts. That is the key. 3.8% traded for 4.5%, and that is then the difference. And now interest rates are not at 5%, now they are 4%. So interactive brokers will see a big decline in those interest rates, total interest rate income. That will be the first factor that hits likely profits going forward, and that is one explanation of what's going on. However, on the other hand, Interactive Brokers records daily average revenue trades in February, so the things is booming as more people are trading on increased volatility, on panic, on whatever is going in the market. However, we must think how there will be an impact of interest rate changes. They say for every 25 basis points decrease in the Fed funds rate, a 64 million reduction in annual net interest income. When you look at this, you say, okay, that is not that much. When we look at net income, if it goes down 250 million, 300 is not that much. However, there is more, there is margin income, there is other, and if interest rates go lower, then it is inevitable that the net income goes down to previous levels when rates were lower, depending on how interest rates go lower. However, there are also other things that are factored there: lower stock prices, the lower market, a recession, all could weigh on crypto, less crypto trading, all could weigh on the business. Recession, Fed lowers rate, less interest rates, lower interest rates, that would be a big burden on the company. However, does it really justify this crash, and when, at what price, given that it is a good business, at what price it is a buy? Is there a margin of safety at 160? Because the growth is there, everything is growing. However, if earnings per share next year, due to whatever reason, go from 7 to 5, then we are talking about a 30-something P ratio. Let's say we have really had a boom in investing, everyone is investing, crypto accounts, this and that. That might also slow down, so we cannot see accounts growing 30%. Even if they are the forerunners, they have this link with me in the description below discussing how going to social media that others are not doing, other legacy brokers, things like that. So they are always at the forefront. So we'll have to see how will this look like in 5-10 years. But when it comes to this, I think there will be always times of exuberance. This is really too bubbly for me. But if it comes lower to 100, and then I know that earnings will go from 4 to 7 and then likely 9 in the future, then that is something that I look. So I would say it's medium risk, medium reward here now. It can still go a little bit lower, especially if we see slower returns, but if not, we can go even higher. So the downside is still another 30-40%. The upside, when the upside count, is certainly there, but I want to look at it from a long-term trend perspective. I want it below trend to gain advantage also from this, plus the dividend, plus the earnings, plus the growth. So do me a favor, see how a global broker, that's also the key why I recommend it, because it gives you low fees globally, and globally you have much cheaper investing opportunities. That's the key. You diversify from the expensive to everyone investing in the US to global markets, and that is also the benefit there. Thanks for watching. I'll see you in the next video.